Hello and welcome to Zenith's rating review of the Charter Hall Direct Long WALE Fund. Zenith initiated coverage of this fund as part of our 2020 Real Assets Sector Review, which resulted in the fund receiving a recommended rating. The fund is an unlisted property trust providing exposure to a diversified portfolio of unlisted real estate. The focus of the fund is on acquiring assets in resilient property sectors and delivering stable income streams. The fund is operated by Charter Hall Direct Property Management Limited, part of the ASX-listed REIT Charter Hall Group. Management of the fund falls to a 5-person investment team who are responsible for the full suite of Charter Hall's unlisted property vehicles. This team is led by Charter Hall's Direct CEO, Stephen Bennett. Our high regard for Charter Hall underpins our conviction in the fund, and the group have developed over time into Australia's largest manager of commercial real estate. They are, by nature, high-conviction asset managers, and we believe their integrated business model allows them to maximise value extraction across all aspects of the investment and asset management process. The group also has its own internal research team, which provides proprietary insights on market conditions. We believe the group's structure and nationwide presence provides the investment teams with timely and valuable on-the-ground market intelligence, which supports investment activities in the fund. We take the view that the breadth of the group's operations is a major positive for the fund. Their extensive resources in market research, transactions and asset management provide strong support for the fund's operation. We also have a high level of conviction in Bennett's capabilities to guide the direct team in managing the fund, viewing these members as highly experienced and backed by the extensive resources of the group. The formal aim of the fund is to provide a stable, tax-advantaged income stream with the potential for capital growth over the medium to long term. As part of the fund's focus on resilient property sectors, priority is typically given to assets with a long-weighted average lease expiry, or WALE. In selecting assets, the fund typically focuses on sectors across industrial and logistics, convenience and large format retail, and social infrastructure. The fund generally targets properties with a quality anchor tenant on long leases with structured rental increases. Especially attractive are assets with tenants on a triple net lease structure dealing in essential products and services. Potential acquisitions are sourced variously via the group's investment pipeline, joint venture partnerships and other market opportunities. Acquisitions are assessed by the group's capital transactions team, which oversees all acquisitions and divestments across Australia. When selecting assets, Charter Hall uses a combination of quantitative and qualitative factors in the due diligence phase for determining the relative value of each asset. Core quantitative factors typically encompass the assessment of a range of valuation criteria, including DCF analysis, capitalisation rates, and comparable sales and valuations. Further analysis is also applied to factors such as supply-demand pipelines, tenant lease structures, rental analysis, and capital expenditure programs. In addition, the fund has the ability to co-invest in assets with Charter Hall's institutional investors, an aspect we see as a competitive advantage. This has given the fund access to especially high-quality real estate opportunities, which have typically remained out of reach for most retail investors. Ultimately, Charter Hall seeks to invest for the long term and actively manages portfolio assets to maximise value and generation of stable income for the fund. The team regularly reviews asset plans and rebalances the portfolio mix, including, where appropriate, selling weaker assets or taking advantage of strong market conditions to make select divestments. We feel that the approach of the fund is somewhat different to the other funds in the Charter Hall suite of products, which tend to focus on specific real estate sectors. This fund, however, is more representative of a sector-agnostic or best ideas philosophy within the mandate. We see this as providing a useful alternative for investors not wishing to make distinct sector bets in a real asset allocation. The fund currently comprises a pool of 12 properties valued at $227 million as at the end of 2020. The portfolio has an average lease expiry profile of 7.9 years with 96% occupancy. We see the fund as being moderately geared at approximately 39%. While we believe the fund lacks some of the prime characteristics of other portfolios in the Charter Hall fund suite, its focus on income resilience and tenant counterparty quality is very strong, as is the selection of assets that are fit for purpose to its objective. Rental uplifts for the fund's current assets are robust over the medium term, with the majority of the assets subject to fixed rental increases in excess of current CPI. Given the minimal incidence of reversionary rent reviews in the portfolio, we believe this should ensure that effective rental growth remains robust until at least 2025, We see this as an important aspect given that the short to medium term rental outlook for some areas of the commercial property market are mixed in the wake of the global pandemic. Internally, the fund has an absolute return objective of a net IRR of 9%. The fund has a relatively recent inception date, having been launched in October 2017. Given the nature of the asset class and due to the fact that the fund's mandate was partially restructured in September 2020 to focus on essential services tenants, we believe that the fund's current performance is an imperfect representation of the longer-term objectives. That said, we note that the fund's performance has been solid, delivering a net of fees return of 8% per annum since inception as at February 2021. Regarding fees, the management cost of the fund is 0.8% per annum, with a performance fee of 15% over a 9% net IRR hurdle. We view this as a reasonably attractive fee structure relative to peers in the Australian unlisted property trust sector. Overall, Zenith believes that the fund may be suitable for investors seeking a real asset strategy targeting long-term, stable income with a capital growth component. By nature of the fund's asset exposure, however, investors must be able to tolerate the risks of gearing and lower liquidity. Given the relatively broad exposure across real estate sectors in the fund, we feel it may be suitable for investors seeking a standalone unlisted property allocation as part of a diversified portfolio. To facilitate investor redemptions, the fund aims to make a withdrawal offer every 6 months, subject to available liquidity and capped at a set dollar amount. The fund also offers a formal liquidity event every 5 years, with the next event scheduled in May 2023. In accordance with our views on the asset class, we encourage investors to adopt a long-term investment time horizon for the fund, which we view as being 7 years or more. This concludes today's review of the Charter Hall Direct Long WALE Fund, rated recommended by Zenith. If you'd like any further information on the fund, please refer to the Zenith or Charter Hall websites. Thanks for watching.